Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday the Australian dollar took a challenge to the downside for the second, third and fourth time, as we can see here over this period, and now respects the level of 67.70 after posting an intraday low for the second time at 67.67. Yesterday, Governor Philip Lowe, most highly anticipated speech at the Australian Business Economists dinner in Sydney, said that the Reserve Bank wasn't expected to have or look to use quantitative easing, but if necessary it would take the form of buying government bonds, and then only if the cash rate reached a low of 0.25%. From a technical point though, there is a bit of bullish divergence here, so we should be on our guard in case we see a rebound off 67.70 and back up towards 68.15 or around that region of 68.40.80. Overall though, the trend is down. Even though it's getting very overheated here, the market can still push towards this level of 67.70, and if so, and once breached, looks towards 67.20 to 66.60.80 as a broader target. The euro slightly subdued overnight as the market starts to unwind for Thursday's US Thanksgiving Day holiday. It is assessed though that the technicals do still support a move towards 109.50.70 and the resistance seen at 110.60 and capped at 111.15.25. Well, the market got a bit of a surprise yesterday and surged towards 109.25 high. The surprise was that senior trade negotiators from China and the US held a telephone conversation in the morning of Tuesday, in Sydney time that is, discussing their core concerns and agreements to maintain communication on potential interim trade agreement. From this, the market is now seeing slightly risk off, but nevertheless, I still feel from a technical point we haven't confirmed any bullish sentiment, and therefore still looks towards 109.25 or above here around 109 as a supply zone, and I do feel the market can easily reject this level and look back towards 108.55 to 107.85. Little to go on with the pound, except for it is breaking down a little bit from the technical point and still married to the bearish case. Nevertheless, I don't have a strong view until we get some indication of this breakout level around 127.80 to 130, the figure. It's only 2 weeks away before election day, so no doubt the market will start picking up momentum as we get closer. As you can see, we've got a bullish outside range day after the test down and held above the level of 1,450, which was the trigger stop loss. Not being triggered though, the market is now expected to break above the level, and if so, of 65, and from that break would see further confirmation to the upside and look towards the target of 72 to 78 to 82. Dips likely to be shallow, but as I mentioned, we need confirmation to this bullish signal, and 65 break should be that confirmation. Oil still maintaining a bullish stance, and I still expect to see a further rise up towards the levels of 58.60, 59.5 and on to 60.61. Any pullbacks should still continue to remain shallow, with support seen at 56.80.85. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new day.